Rule number 1, never lose money. Rule number 2, never forget rule number 1. These are the famous words of Warren Buffett, the Oracle of Omaha, whose investment strategies have reached almost mythical status. But how does he apply these rules to consistently avoid losing investments? Is there a secret method to his madness, or is it disciplined adherence to principles that most of us overlook? In this video, we're unraveling the wisdom behind Buffett's success and how you can apply his investing principles to your portfolio. Welcome to a journey few embark on, a path that leads to the wisdom of the Oracle of Omaha himself, Warren Buffett. Have you ever wondered what sets apart the greatest investors from the rest? Today, you're stepping into an exclusive circle, uncovering the secrets that have propelled Buffett to the pinnacle of investing success. Ready to see the investment world through his eyes? Let's dive into the philosophy that has not just shaped a billionaire, but also redefined investing for generations. Understanding Buffett's investment philosophy. Why does Warren Buffett's approach captivate millions? It's simple yet profound. Buffett's investment philosophy isn't just about picking stocks, it's about adopting a mindset. Imagine looking at a company and seeing beyond its price tag, understanding its true value as if you were to own it forever. This is the essence of value investing, but how does Buffett discern the wheat from the chaff? Value investing, the bedrock of Buffett's success. At the heart of Buffett's strategy is the concept of value investing. But what does it truly mean to invest in value? It's not just about cheap prices. It's about finding companies so robust, so fundamentally sound that they stand like lighthouses in the stormy seas of the market's ups and downs. Have you ever stumbled upon a deal so good that it felt almost criminal not to take it? That's the thrill of discovering true value the Buffett way. The long-term perspective. Buffett views investing through a telescope, not a microscope. He's not swayed by short-term fluctuations, but focuses on the potential of a business years down the line. Imagine holding a piece of a business that grows steadily, paying you back manifold over decades. How would that change your view of investing? Have you ever considered what it means to invest with a long-term perspective? Can you think of a company you believe in so strongly that you'd be comfortable holding it for 10, 20, or even 30 years? You're now privy to the cornerstone of Buffett's philosophy, a perspective shared by the most successful investors. It's a mindset shift from seeking quick gains to building lasting wealth. As we delve deeper into Buffett's strategies, remember, you're not just learning to invest. You're learning to see the world through the lens of one of the greatest investors of our time. Understanding Buffett's investment philosophy. Have you ever wondered what sets apart the truly successful investors from the rest? What if I told you that the secret sauce isn't just about picking the right stocks, but embracing a philosophy that has stood the test of time? Yes, I'm talking about Warren Buffett's investment philosophy, a mindset that has transformed Buffett from a mere investor into a global icon of financial wisdom. Why value investing? At the heart of Buffett's approach lies the concept of value investing. But what does value investing really mean? Imagine walking into your favorite store and finding that the high-quality product you've always wanted is now available at a 50% discount. You know its worth, understand its quality, and can now acquire it for far less than its value. That's value investing in a nutshell, identifying undervalued companies that have strong fundamentals but are currently underpriced by the market. Now ask yourself, how often do you come across such opportunities in your life? And more importantly, would you recognize one if it stared you in the face? Buffett's genius lies in his ability to spot these opportunities consistently and with remarkable precision. Long-term over short-term. Buffett's disdain for short-term speculation is no secret. He champions the idea of long-term investment, often quoting his favorite holding period as forever. But why does he advocate for such a long horizon? Because he understands something fundamental that many overlook. The market's short term is volatile, unpredictable, and driven by emotion rather than logic. Consider this. How many times have you made a decision in the heat of the moment that you later regretted? The stock market is no different. It's the long term, grounded in solid fundamentals and intrinsic value, that smooths out the bumps of short-term volatility. The importance of being informed. Buffett spends a significant portion of his day reading, be it annual reports, financial news, or books. This insatiable thirst for knowledge is a cornerstone of his investment strategy. It's not just about understanding the businesses he invests in, but also about staying informed about the world. This comprehensive awareness enables him to make connections and see opportunities that others might miss. So, how well do you know the companies in your portfolio? Do you understand their business models, their competitive advantages, and the challenges they face? Or are you relying on tips and hunches? As we delve deeper into the nuances of Buffett's investment philosophy, consider this your personal invitation to a club of informed strategic investors. It's not an exclusive club reserved for the elite, but an inclusive group for those willing to learn, understand, and apply timeless principles to their investment decisions. In the next sections, we'll explore the key strategies Buffett uses to avoid losses, delve into the psychological aspects of investing, analyze case studies of his most successful investments, and most importantly, discuss how you can apply these principles to your investing journey. Are you ready to see the world through the lens of value investing? Are you prepared to commit to the long term, to invest not just your money, but your time and effort into truly understanding your investments? If so, welcome to the club. Key strategies for avoiding losses. Now that you're on the path to viewing investing through the lens of Warren Buffett's philosophy, let's uncover the strategies that act as his compass in the vast ocean of the stock market. How does Buffett navigate through the turbulent waters of investing without capsizing? The answer lies in a set of principles that might seem simple at first glance, but require discipline and insight to apply effectively. 1. Thorough research, the foundation of every decision. Imagine you're an archaeologist. Each investment opportunity is a potential historical site. Would you start digging based on a hunch, or would you study the area, understand its history, and plan your excavation meticulously? Buffett's approach to investing is not unlike the careful, methodical work of an archaeologist. He digs deep into companies, understanding their business models, revenue streams, and market positions before making a move. Ask yourself, when was the last time you dived deep into the annual report of a company you're invested in or planning to invest in? Remember, the devil is in the details. 2. Margin of safety, your safety net. The concept of the margin of safety is akin to wearing a seatbelt. It's there to protect you in case something goes wrong. By investing in companies valued less than their intrinsic worth, Buffett ensures a buffer that can absorb market volatility and unforeseen events. How do you assess the margin of safety in your investments? Is there a buffer between the price you pay and the value you get? 3. Quality over quantity, the golden rule. In a world that often celebrates more, Buffett focuses on better. He chooses companies with a proven track record, strong leadership, and a durable competitive advantage. It's about owning a piece of a few great companies rather than spreading yourself too thin. Reflect on your portfolio. Are you chasing quantity or quality? Are your investments in companies that you believe in for the long haul? 4. Market fluctuations, opportunities, not threats. Buffett sees the market's ups and downs as opportunities rather than threats. When others are fearful, he finds bargains. When others are greedy, he exercises caution. This contrarian approach requires not just courage, but a deep understanding of market cycles. How do you react to market fluctuations? Do you see them as threats to be avoided or opportunities to be seized? 5. Patience is a virtue, the Buffett way. In an age of instant gratification, Buffett's patience stands out. He waits for the right opportunity and holds on to his investments through thick and thin. This patience is not passive. It's an active, disciplined waiting for the right moment. How patient are you with your investments? Can you hold on to a great company through market downturns, trusting in its long-term value? By understanding and applying these strategies, you're not just investing in the stock market, you're investing the Buffett way. It's a journey that requires patience, discipline, and a commitment to continuous learning. But remember, you're not alone. You're now part of a community of investors who see beyond the surface, who understand that true wealth is built over time, and who know that the secret to avoiding losses is not in avoiding risks, but in investing wisely. As we move forward, keep these strategies in mind. They're your toolkit for navigating the complex world of investing, a world where you're now playing at a different level. Buffett's Psychological Insights. Welcome to the inner sanctum of investing wisdom, where understanding the numbers is just the beginning. The true mastery lies in conquering the mind. Warren Buffett, through decades of unparalleled success, teaches us that the battleground of investing is not just on the charts and in the numbers, but within ourselves. How does Buffett maintain his composure in the face of market hysteria? Let's dive into the psychological fortitude that underpins his investment strategy. Emotional discipline, the Buffett shield. Have you ever wondered how Buffett remains steadfast when the market is in turmoil? It's emotional discipline. While many investors get swept away by the tides of fear and greed, Buffett's anchor is his unwavering commitment to his principles. He doesn't get distracted by the noise. He focuses on the music of long-term value. Ask yourself, are you swayed by market sentiments, or do you have a shield of emotional discipline? The fear-greed cycle, Buffett's contrarian approach. Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." This simple yet profound advice encapsulates his approach to capitalizing on the market's irrationality. It's a psychological play recognizing that the market's mood swings create opportunities for those who can remain calm and rational. How do you react to the market's mood swings? Do you follow the herd, or can you identify opportunities in the panic? Being contrarian, the courage to stand alone. Buffett's success is not just about what he does, but also about what he doesn't do. He often goes against the grain, making investments that seem counterintuitive to the market at large. This requires not just insight, but the courage to stand alone. Consider your investment decisions. Do you have the courage to trust your analysis, even when it goes against popular opinion? The power of patience. Investing as a marathon, not a sprint. In a world obsessed with speed, Buffett reminds us that investing is a marathon, not a sprint. His long-term perspective is not just a strategy, but a mindset, a belief in the compounding power of patience and time. How patient are you with your investments? Can you resist the temptation to constantly check stock prices, understanding that true value unfolds over time? By embracing these psychological insights, you're not just making smarter investment choices, you're elevating your approach to one that's shared by the most successful investors in history. You're learning to master not just the market, but yourself. As we continue on this journey, remember that the path to investment success is as much about understanding human behavior as it is about analyzing companies. You're now part of an elite circle of rational investors, equipped with the wisdom to navigate the emotional roller coaster of the stock market. Case studies, Buffett's strategies in action. Entering the realm of tangible success, let's explore how Warren Buffett's principles have been applied to specific investments, turning theory into substantial profit. These case studies are not just stories, they're lessons in patience, research, and conviction. As we delve into these examples, consider how the strategies and psychological insights we've discussed come to life in the decisions of one of the greatest investors of our time, Coca-Cola, the taste of long-term value. In the late 1980s, Buffett began buying shares of Coca-Cola, a company with a century-old brand, a product loved worldwide, and a durable competitive advantage. Despite the market's short-term fluctuations, Buffett saw intrinsic value in Coca-Cola's brand and its global market position. His investment in Coca-Cola exemplifies the importance of understanding a company's fundamentals and investing with a long-term horizon. Reflect on this. Are there companies in your portfolio that have a Coca-Cola-like enduring value? Apple, tech with a human touch. Buffett's investment in Apple, starting in 2016, surprised many who thought he steered clear of tech stocks. However, Buffett recognized Apple's value not as a tech company, but as a consumer brand with a loyal customer base and a robust ecosystem. This investment underscores the importance of looking beyond industry labels to understand a company's true value proposition. Ask yourself, are you overlooking potential apples in the market because of industry stereotypes? BNSF Railway, betting on America's economic engine. Buffett's acquisition of BNSF Railway in 2009 was a massive bet on the American economy's future. Railroads are critical infrastructure for commerce, and BNSF's extensive network across the U.S. offered a unique competitive advantage. This move highlights Buffett's strategy of investing in businesses with durable competitive advantages and his belief in the long-term growth of the American economy. Consider this. How do your investments reflect your outlook on the economy or specific sectors? These case studies are a testament to the power of Warren Buffett's investment philosophy. They illustrate not just the potential for profit, but the depth of thinking and analysis that precedes each decision. As you reflect on these examples, remember that the principles behind them can be applied to your investment strategy regardless of the scale. You're now equipped with the knowledge and insights that have shaped some of the most successful investments in history. As we move forward, think of how you can apply these lessons to your portfolio, transforming not just your investments but your approach to the market. Applying Buffett's principles today. As we stand on the threshold of applying Warren Buffett's investment wisdom, it's crucial to remember that the journey of investing is deeply personal and requires a commitment to continuous learning and adaptation. Here are practical tips to help you integrate Buffett's principles into your own investment strategy, ensuring you're not just a spectator, but an active participant in the art of value investing. 1. Cultivate a habit of reading. Buffett's knowledge and insight are not products of intuition, but the result of a voracious reading habit. Start by dedicating a portion of your day to reading, be it annual reports, financial news, or books on investing and economics. The goal is to build a solid foundation of knowledge that informs your investment decisions. Set a goal to read 1 investing book or 5 annual reports each month. Note down key insights and how they might apply to your investment strategy. 2. Practice patience and discipline. The allure of quick gains can be tempting, but Buffett's success underscores the value of patience and discipline in investing. Before making any investment, ask yourself if you're willing to hold on to it for the long term. If the answer is no, reconsider your decision. Review your portfolio and assess each investment's long-term potential. Make a commitment to hold your investments for at least 5 years, barring fundamental changes in the company's prospects. 3. Develop a criteria list for investments. Buffett doesn't invest on a whim. He has a clear set of criteria that a company must meet before he considers investing. Develop your own list based on principles such as strong management, competitive advantage, financial health, and fair valuation. Create a checklist of criteria for your investments. Use this list to evaluate potential investments and to review your current portfolio. 4. Embrace a margin of safety. The margin of safety is your buffer against the unpredictable nature of the markets. It involves investing in undervalued assets where the perceived risk is lower than the potential reward. This principle protects you from significant losses and enhances your chances of investment success. For each potential investment, calculate its intrinsic value and compare it to its current market price. Look for opportunities where the market price is significantly lower than your calculated intrinsic value. 5. Stay informed but not influenced. While staying informed is crucial, it's equally important to maintain your conviction in the face of market volatility and popular opinion. Develop the ability to differentiate between short-term noise and long-term value. Limit your exposure to daily market news and commentary. Instead, focus on quarterly and annual reports to make informed decisions based on long-term trends and fundamentals. By adopting these practical tips, you're not just applying Buffett's principles, you're cultivating an investment approach that prioritizes knowledge, patience, and value. Remember, the path to investment success is a marathon, not a sprint. It's about making informed decisions, learning from the journey, and staying true to your principles. As you move forward, carry with you the wisdom of Warren Buffett, the support of this newfound community of informed investors, and the confidence that comes from knowing you're investing not just for profit, but for a future built on solid, time-tested principles.